Hey everybody, hopefully you're having a great day. My name's Andy. My channel's Finding Value. If you like making money, lots of it, so much that you've got stacks, like stacks of gold bars in your pockets. That's the amount of money that we're going to make. The only problem is you're going to have lower back pains carrying all that money. So subscribe to the channel. Give me a thumbs up if you like this content. I'm going to go over ratios and correlations. So I'm going to go over a bunch of stuff relating to commodities, valuations, and trying to correlate ratios to prices. So you guys can see that correlation. So let's jump in and see what I've got. So I call this ratios and correlations. So here is the commodity to S&P 500 ratio. This tells us what's cheap. It's two assets. It tells us what's cheap over time. Commodities are cheap at the bottom of this when it's under 2. Cheap, cheap, cheap. Expensive, expensive, expensive. So commodities expensive and stocks are cheap at the top here. So I've correlated those these circles here to the housing starts. So this is where the timing would be and the selling would be for each of these, roughly. So when this starts to go down, you're going to have to start looking at potentially selling. This one went down and came back up. But it's delayed a little bit behind the housing starts when it comes down. But we're throwing a buy signal in terms of valuations right now, and this is where the housing starts are. And wherever we go into an expansionary phase, it usually is a start of a commodity bull market, it seems like. Here is gold relative. This is the gold to oil ratio. Oil's cheap up top, oil's expensive on the bottom. We threw a buy signal here and a sell signal here. The ultimate top was actually this one right here. This one was this one. And this is a green buy signal, signaling that oil is extremely cheap in relationship to gold. This is what it is correlated to the price of oil. So we took these guys and correlated it to this. Cheap, expensive, and cheap. Next, this is the platinum to gold ratio. Downtrend line, we broke out of the downtrend. We are now currently at 0.64. So that means that platinum is 0.64 ounces of gold. On a historical ratio basis, that is like right down here. Cheaper than all the way going back to 1970s. Now, when would I sell it? I would sell it if it got above 2 or when the market conditions change for platinum, both of those conditions. But I'm buying still, and I was buying even at 0.4, 0.5, 0.6, all through, I'd say anything below 0.7, I was a buyer down here. In 2019, I was buying here, all through here, and I would still be a buyer. And I would definitely be a buyer because it just broke out and the momentum's going to the upside. So I think platinum looks fantastic. And on a historical basis, it's never been this cheap. I would be a seller above 1.5 or 2. Somewhere in this range, I would start to look at the charts to see when the momentum changes and when the chart looks bad to continue to go higher. So I would be cost averaging out probably above 1.5 or 2 or maybe even 3 if it got there. Now this is those circles correlated to the platinum price here and here, even though it went up this way, here and there, that correlates pretty well with the commodity to S&P 500 ratio, and it's throwing a buy signal and looks like that correlated well. So the buy signals are correlated very well. Sell signals correlate okay to platinum. Look at that thing move on up. Nice. Platinum to palladium ratio. This is what this looks like on a long-term basis. We're getting very low. Typically, platinum is 4 to, I would say 3 times more expensive on average to palladium. But it's gotten up to over 5 times. So platinum could buy 5 ounces of palladium sometimes in history. But now, platinum can only buy a half ounce of palladium. Only a half ounce, but we're breaking out here. So I'm buying platinum like hell because of its valuation. and in its valuation in relationship to palladium is an absolute steal. And I actually exchanged all of my palladium for platinum right here. Perfect little, hopefully that was the bottom. Looked like a double bottom to me. So that is palladium. We'll go to gold to copper ratio. It threw a buy signal here and a sell signal here in terms of commodity to stocks ratio. And remember, this was going up all at the same time because gold was going up. So copper made purchasing power gains against gold. It became expensive, and we would want to get rid of our copper investments at this point here, and this was the crash. So if you're getting around 200, you are pretty expensive. Now, what is it today? Today, we were at a bottom of 750. 750 was off the charts up here. Super cheap here earlier this year. And we are heading back down. We're at 500 right now, and 500 on this chart's right at the top. So we're still expensive. And I'm guessing the move will go all the way down to 200. And remember, if gold is moving up, copper's got to move up that much more if it's going to get expensive. But it's moving down, and copper's outperforming gold. This chart here is the gold price. So this is how it correlates to gold. We've got buy signal, sell signal here. Obviously, you want to hold it past that sell signal. Buy signal, sell signal, you want to hold it past a couple years. Buy signal, if we throw a sell signal, I'd probably want to hold it for a couple years longer. This is silver, and the buy signal and sell signal here. Again, this follows more on the lines of gold. You want to hold it a little bit longer than your commodity sell signal. It's throwing a buy signal. So the buy signals are spot on. The sell signals you want to hold a little bit longer for silver than our commodity to stock ratio. So these are the ratios. That's the correlation that I have. I just wanted to show you guys this. It gives you buy and sell signals. The buy signals are spot on. It's throwing a buy signal right now. So it's still incredibly cheap. The ratios are still cheap, and they're all just starting to move, signaling that a commodity bull market is here. So that's what I see. If you have precious metals, it seems like the commodity sell signal, you want to hold about 2 or 3 years, or maybe even up to 5 years past that sell signal against stocks. At least that's what the data shows us. So that's where we're at with some of these metals. I wanted to share that with everybody so they know how cheap they are, what they're doing in relationship to each other, and some of the sell signals that are thrown and how accurate those sell signals are. What I would use is more of a Dow to gold ratio for gold. That may give you a better signal, and when it starts to turn and reverse up. And you can also use oil to gold, silver to gold. You can use all the direct relationship ratios to give you your sell signals as well. If you like this content, subscribe to the channel. Give me a thumbs up. Leave comments below if you guys are confused on this ratio analysis. Let me know. And thank you for listening. This is Finding Value.